Welcome to Overnight Market Brief, pre-market edition by AGI Era. Good morning. Today is Wednesday, December 31st, 2025, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished on a defensive footing in a session characterized by low-volume, year-end positioning. The S&P 500 settled at 68.96, down 0.14%, while the Nasdaq 100 declined 0.25% to close at 25,463. Crucially, the session was driven by portfolio rebalancing, but the real story right now is in the macro assets. Right now, the 10-year Treasury yield is trading at 4.115%, ticking slightly lower. This subtle move is keeping pressure on the U.S. dollar. The U.S. dollar index is effectively flat at 97.91, but this comes in the context of it tracking for its steepest annual decline in 8 years, a dominant theme heading into the new year. Elsewhere, crude oil is bid up 0.3% to around $58.14 a barrel, while gold is seeing significant profit-taking, down over 1% to 433.26. The persistent weakness in the dollar is the key macro narrative, typically a tailwind for risk assets, but the year-end flows are currently muting that correlation. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been cautious. In Asia, the picture was mixed, with a clear divergence following Chinese data. In Tokyo, the Nikkei 225 finished down 0.37%, weighed down by a stronger yen and year-end profit-taking. Meanwhile, in Greater China, the Shanghai Composite edged higher by 0.09% after the latest PMI data showed an unexpected return to expansion for factory activity. However, this optimism failed to translate to Hong Kong, where the Hang Seng fell 0.87%, as traders focused on broader global growth concerns. In Europe, major indices are trading cautiously lower, taking their lead from the subdued Asian session and providing a soft lead-in for U.S. traders. U.S. futures and the open. Turning to the U.S. pre-market, equity futures are pointing to a weaker open. S&P 500 futures are trading down 0.10%, while Nasdaq 100 futures are off by 0.19%. The price action reflects a risk-off sentiment in thin holiday trading. The lack of a significant bounce, even with yields slightly lower, suggests that positioning and profit-taking are the primary drivers this morning, overriding the typical macro correlations. The daily catalyst. Looking ahead to the final session of 2025, the economic calendar is exceptionally light. The market will not be driven by data, but by flows. Investors are focused on 3 key factors. First and most importantly is year-end rebalancing and institutional positioning, which can create unpredictable moves in a low-liquidity environment. Second, the performance of the U.S. dollar into the annual close will be closely watched, as its pronounced weakness has been a core theme for global markets. And finally, with volumes thin, the market is susceptible to exaggerated moves on any headline, making technical levels more significant than usual. With a light economic calendar, flows will be driven primarily by technical positioning and portfolio adjustments. Given the soft overnight tone, the market's path of least resistance appears to be range-bound to lower as the year draws to a close. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.